All right, hello and welcome everyone. Doug here with thelincolnlist.com. I want to welcome you back to another weekly edition of Stock Market Mutterings. This is for the week ending on April 22nd, where I'll try my best to find you some good trading setups here for the week. As always, if you need help with your trading, you're struggling, or you're looking to join a community, visit thelincolnlist.com and trade with us live. So let's start talking here about the market, because where we left off last week in last week's Muttering, we were talking about we were just right there under the 50 moving average. So if you kind of look down there on the bottom chart, that red line there, right there, that is the 50 moving average. And we kind of gap above that a little bit on Monday. So it kind of starts to feel, if you remember last week, one of the things I said was the market feels like it wants to get rid of some of this volatility. So at the beginning of the week, it's showing those signs. It gaps above that 50. It has some grinding nature to it. Some of these stocks are pressing up against high, and it's giving you that feel that this is what it wants to do. However, once it crosses hump day, it's like the tale of 2 weeks. The first couple of days was this way, and then after that, everything just started dropping. And as the week progressed, most of these moves were just getting stuffed. Now, what I mean by that, for some of the new people there who don't know what the lingo I'm using there, is that means you get these nice charts and they look like they're going to break out, and they'll snap up 20 or 30 cents. And that's something that you used to be able to rely on prior to February. That, you know, you could get some momentum building to the upside. Now, there's always going to be stocks that build up to the upside regardless of what kind of market you're in. But for a group and whole, beta names and other stuff like that, you get these moves and they were just stuffed. I mean, jammed, meaning they just reversed quickly. Not only did they reverse the breakout move, but then they would just start stinking down to lower days. I think you saw that on Friday with stuff like Netflix here, Tesla. Here's another one I think here is, let me put this Tesla up here for you to show you what I'm actually talking about. It's the intraday Friday. This is a good one here. You're breaking out, and then all of a sudden when you reverse, and then you just, you know, you hightail it to low a day, and you just never, ever see the light of day. It's just grinding down and just breaking down and just going like that. So that's what we saw there towards the end of the week. And just Friday was just all-day selling. I mean, the market couldn't get out of its own way. You had a couple of big reversals there during the week. So that's something that we need to pay attention to, because now we're yet again back underneath of this 50. So for the last couple of weeks, maybe even a little bit longer than that, maybe a month or so, we've been dealing in between the 50 at the top side and the 200 moving day at the lower side. So let's just kind of look at what we can expect here. As the market closes on Friday, you are now down at the 10 moving average on the daily chart. Now, I don't know if this is going to hold, but if you want to start looking lower, you got some nearer term supports that dates back to, I believe it is the 12th, somewhere around the 12th to the 13th, right there. Excuse me. Around the 12th to the 13th, you got some 260, let's say just 264.5. You got some 264.5 support. So if that gets tested early on Monday or gaps down to that level, pay close attention to that, because just right below that, you got the 20 moving average of about 264 flat. So I think your first line in the sand, let's first look at let's look at two different scenarios, upside and downside. If you start gapping down, you start selling off, you see breakouts failing, you start retracing, you've got to look down here at about 264 to 264.5. Very short-term resistance. It's not super solid resistance by any means, but there is a pivot down there. And at least if it gets down into that pivot, you'll be able to get an idea of the interest in the market and how interested people are in buying, if that's what you're looking at. Now, if you lose that, I can't see right now how you could not make the case for the 200 moving day average not to be retested again for what seems to be the umpteenth million time. I know that's an exaggeration, but you're all the way down there at 260. So, I mean, that's what you very well may be looking at that again. If something happens over the weekend or as things start to get aggressive, which is what we were starting to see on Friday, was more aggression, lots of selling there. We're going to have to see how this plays out. But those are your two downside levels for Monday, for the beginning of the week. Look for that 20 moving average, just say 264s for your first line, and then the 200-day moving average down at 260. Now, if you can start working upwards, I mean, I think you'd have to probably go back to 270. I don't know if that's going to be the case, but 270, 271s, you might be able to make this somewhat of a flag and start breaking out and filling in some of this air up there. But that's a good ways off. I think the first thing that you would need to see in that situation is not having these moves stuffed, which means the breakouts would need to hold, the momentum moves would need to hold, and not just have these abrupt and immediate retracements. So we'll see how that market plays out. There will be individual names that'll be running throughout the week that we'll be paying close attention to. Now, one of those is going to be Apple. got to take a good look at this Apple. This is one of the bigger sell-offs I've seen in this name in a while. Well, not a while. Say January. And this thing just got buried. You know, it started out with these chip makers with NVIDIA and stuff like that. And then, of course, some, you know, Chinese news, weak iPhone sales, all this good stuff. Anyway, 2 days before, you know, Wednesday, this thing was just grinding right on up. It was like on a 6-7 day rip, just kind of melting up, was at 178, and just like a snap of your finger, that's what I'm talking about, just getting stuff. 2 days, it goes right from there, it just slams down to $165. So you're losing almost 10 bucks a share or more, actually more than $10 a share in a 2 day span, and you're just buried right there on the 200 moving day average. This thing couldn't get a damn bounce. And again, here's the stuff move. You get a little bit of momentum, a flush at the open. This is day 2 of the flush. If you look at the upper chart, this is an intraday 5-minute. You get a breakout on this thing, and then not only does it sell the break off, but it makes a new low. Tries that again, makes a new low. So every single breakout, it resulted in a new low. I don't know if this thing can grind it back. I'm sure it will. We're having this conversation about Apple. If you're saying, if you want to buy it for an investment, this is a great time to buy it for an investment. You're going to be all right in the long run. If you're a trader and you're looking for a quickie, this hasn't been the best trading stock because it's been replaced with things like Tesla, Amazon, NVIDIA, Netflix, where you've had more range in those moves. It's been sort of docile, but hey, 10 bucks down here, you know, you're due for a $4 or $5 rip day. And a stock like this most likely will get some sort of a defense by a fund or an upgrade or something like that. So kind of watch out for it. It's attractive down here at the 200-day moving average. Look for a good setup, but you're due for a nice pop day within Monday or Tuesday on this Apple. Now, speaking of Tesla, because I just had it on the screen, this thing has now changed the way it behaves. And we've always had this joke about, you know, Musk in our trade room about it's every Friday when options are due to be expiring, something comes out of the woodwork. Like he'll tweet something or say something, it'll be an upgrade. There's always something every Friday, it seems like, on Tesla. But every kind of news story now that comes out on this thing isn't helping it. It was working real good for that stock for years. It bounced it really hard off of 260. But now you're just drifting. Like with everything else, it's just showing mass signs of weakness. Now you got earnings coming up on a lot of these. The thing with Tesla is, and I understand, any given day this thing can just get up and go 18 bucks. I get that. But you got to start looking down here a little bit lower. If you start going down, I know it's a little ways off, but if you start getting down into the mid 280s here, which was the lows from about 4 days ago, if you see failed rallies like you saw today, you see ignoring PRs, upgrades, and other events like that, and you start taking out that lower, you have got to be thinking this thing is a short for a retest down to 260. Now this would be a trade only, and the reason I say watch that is because if it breaks, it will probably flush $3 or $4, and that might be your trade because this thing has been known to flush $3 or $4 and then turn around and go green by 17. So that's the kind of stock this Tesla is. We'll kind of watch that. Now you have a nice little tight consolidation right here. BA, something to watch. You got a couple of nice, you know, just kind of kissing the 50 moving average on the daily chart down bottom. Flagging a little bit. I think if you get a break above 342.40s, you got yourself a nice little trade. However, be very, very careful. You got earnings coming up here, and don't play anything through earnings. That's before market on 4/25. So you got a couple of days to make a play there prior to earnings. And the last one I want to throw in here is little Lulu. Lulu. I got to start looking at this thing short. Now it hasn't gone vertical here on the daily, but damn, this thing has been ignoring all this market hoopla. This thing is just like going. It's got a really, really steep RSI here on the daily chart. It's just grinding away. It's just on its own. It's spread out from the 10, 20, and the 50 moving average. I would look for some sort of vert. Now, the issue I'm having with this one is I think this is going to be more of a swing trade kind of play because I don't know if I'm just going to get in this and it's going to roll over $3. I won't rule out that possibility, but the range on this thing right now isn't indicating that if you short it, you're going to get that kind of move. It's probably going to be something in a couple days, finally breaks down. But I really want to focus on this Lulu going short, especially if you get a parabolic move that starts sniffing around the 100 mark here as we sit at 96.31. Then that's what I would look at. It still has to set up, though, before I short it. So anyway, those are a few names to take a look at real quickly. We had Apple for a bounce, Tesla possibly as a short. Well, Tesla, hell, you can trade that up back. It gives you range both directions. trade Tesla. Tesla's always got to trade in Tesla. BA possibly for a breakout in Lulu for sure. Will they pan out? Hell, I don't know. That's why we get up every day and we do what we do, because we'll find something. So if you need help, visit thelincolnlist.com. Thanks for watching this weekly edition of Stock Market Mutterings. Until next week, take care and trade well.